Assalamualaikum and hello everyone. My name is Muhammad Izzat bin Abdul Latif. In this video, me and my friend will talk about the article The Rise and Fall of Management Accounting by H. Thomas Johnson and Robert S. Kaplan. Firstly, management accounting information being produced too late, too aggregate, and also too distorted to be relevant for managers' planning and control decisions. This is because this information has been driven by the procedures and cycle of the organization's financial reporting system. Internal accounting system focus too narrowly on producing a monthly earning report because of upcoming more stress on meeting quarterly or annually earning targets. The considerable resources to compute in monthly or quarterly income figures fails to measure the actual increase or decrease in economic value that has occurred during 1980s. Secondly, management accounting reports are helping operating managers to reduce costs and improve productivity. Usually, these reports make it difficult for companies during that time, as operating managers need to understand and explain various that of the economy and real technology of their operations. Management accounting systems not specific in time efficiency, or maybe the information is too narrow on input such as a direct labor. That's very important in today's production environment. Thus, the system gives distract to managers from notice the key factors that are important in production efficiency and fail to give relevant information. Moreover, the management accounting system fails to provide accurate product costs. This is because of simplistic measures that affect the cost. The simple measure like direct labor basis, which did not represent customer demands by each product being met by a company's resources. The standard product cost system, which is synonym with most organizations, can lead to enormous cross-subsidies across products. It means when the standard product cost information only represents with available data on product costs, there will be a risk opportunities in decision-making on product pricing, product sourcing, product mix, and advantage to rival products. Besides that, managers could contract to the short-term cycle of their monthly profit and loss statement. The financial accounting system treats many cash outlays as expenses of the period, even though these outlays give some benefits in future period. All cash outlays that to improve the products in terms of quality, long term, available in marketing getting, sustainable in getting sales, can produce certain cash inflows for the future. Managers want to achieve short-term profit goals can meet these goals by reducing their expenditure on discretionary investments. This will reduce pressure on managers in short-term profit. There could be a very short-term measure that need to be appropriate for motivating and evaluating managerial performance. In conclusion, the management accounting systems provide a misleading target for managerial intention during 1987. This is because they fail to provide the relevant set of measures that appropriately fit with the current technology at that time, products, processes, and competitive environment in which the organization operates in 1980s.
Greetings everyone, I am Jeshina. I am going to speak about the challenges and opportunity of the rise fall of management accounting. So firstly, we're going to talk on the challenges. The speedy growth in product process, technology and large-scale fluctuation in currency exchange rates and raw material prices necessitate perfection from corporate management accounting system. An organization management accounting system needs to give timely, relevant and accurate information to assist efforts to regulate costs, measure and enhance or improve the production process. The management accounting system also need to report the right product charges, so those pricing decisions, the introduction of new product, abandonment of obsolete product and responses to the appearance of the rival product can be made with the best feasible information on product resource command. Subsequently, extensive decentralized organization demand system to stimulate and evaluate the performance of their directors. This system should give proper incentive and signal to managers working in various functions with different product and processes among globally disbanded operation. So the organization management accounting system assists as an essential communication link among senior and subordinate manager. It is whereby senior executive communicate to subordinate and decentralized managers the goals and purpose of the organization. However, in the reverse direction, the management accounting system is the channel by which information about the firm production performance and production efficiency get reported to upper level of managers. An outstanding management accounting system will not by itself assure accomplishment in the current economy. Eventually, achievement depends on the product that satisfies customer needs on production efficient and distribution system for this product and effective market efforts as well. Despite this, an ineffective management accounting system can threaten even the most excellent effort in product development, process improvement and market policy as well. Besides an ineffective management accounting system, the most desirable outcome happens when managers understand the irrelevance of their system and neglect it by developing personalized information system. So next we look on the opportunity. Providentially, the enlarged demands for best management accounting system happens at a time when the charges for collecting, processing, investigating and reporting information have been reducing with many production processes under the direct control of digital computers. Information be recorded in real time for analysis of operational performance. While high program circumstances, virtually every transaction can be captured with local area network technology can produce persistent network technology situated reported of WIP. Therefore, an extensive system now can precisely measure and attribute the resources demand made by each product diverse product line. Timely and relevant managerial and performance measure can be computed and broadcasted completely in an organization. So current designers of management accounting system can practice advanced electronic technologies to devise reporting and control systems that are more reliable, more timely and so more effective than those originated by their predecessors. So the computer revolution of the past 2 decades has so decreased information collection and processing expenses that it has eliminated virtually all limits to the design and implementation of an effective management accounting system. So yeah.
Greetings to Madam Faiza. Today I'm going to talk about management accounting roots. Historians have shown that for thousands of years, accounting reports have been prepared. Records of bookkeeping dating back to ancient civilization which have been found carved in tablets of stone. 500 years ago, the fundamentals of well-functioning double-entry bookkeeping system were identified by a Venetian monk named Fra Pescioli. Thus, the demand to record information on commercial transactions has existed as long as people trade with each other in the market exchange. A recent phenomenon is the need for management accounting information for information on transactions taking place within their organization. Virtually all trading transactions existed before the beginning of 19th century between an owner-entrepreneur and an individuals who were not part of the organization, which are raw made manufacturers, piecework paying labor, and consumers. There were no levels of management, nor long-term salaried employees of the organization. Transactions occurred in the market and measures of success were easily obtained. The owner-entrepreneur need to collect more cash from sales to customers than was paid out to suppliers of the inputs factors of production.
The emergence more than 150 years ago managed hierarchical organization created a new demand for accounting information. As conversion processes, which were formerly were supplied at a price through market exchanges, became performed within the organization, a demand arose for measures to determine the price of output from internal operations. Lacking price information on the conversion process occurring within the organization, which owners measures to summarize the efficiency by which labor and materials were converted to the finished products. These measures these measures also serve to motivate and evaluate the managers who supervised the conversion process. Such measures were especially important because frequently the factories were located considerable distance away from the central office of the owners. Thus, management accounting developed to support the profit-seeking activities of entrepreneurs for whom multi-process, hierarchical, managed enterprise were more efficient than managing conversion process through continual transaction in the marketplace. The early accounting metrics for management were basic, but seems to represent the needs of owners and managers as well. They concentrate on conversion costs and develop summary measurements for each process and for each worker, such as cost per hour or cost per pound produced. The measured costs included labor and facilities, and some attribution of operating costs was involved too. The purpose of this system was to assess the cost of companies' intermediate and final goods to provide a benchmark for evaluating the efficiency of the conversion process. The management accounting information provided, in essence, a replacement for proxy and for market prices which were absent in controlled undertakings. And as a conclusion, the management accounting system was developed to encourage productivity in the organization's main operational operation. An alternative transaction-based system that recorded receipt and expenses and produced periodic, pre-assembly annual financial statement for companies, owners and creditors may be available. But these two systems, management and financial, operate independently for each other.
Hello everyone, I want to discuss about loss relevant based on the article Management Accounting that practice today had been developed by 1925. For example, cost accounting, material, overhead and many more. This practice had been evolved to serve the informational and control need of managers of increasingly complex and diverse organizations. Unfortunately, the pace of innovation seemed to be stopped in the midst of 1920. There was incentive and encouragement to continue to develop innovative management accounting procedures. Then, the diversity of production and complexity of manufacturing process continued to rising in decade after 1920. Therefore, the need for accurate product cost and effective process control should have imposed new design on organization management accounting system. But after 1920, the evolution of management accounting system did not keep pace with the improvement in corporation, product and process technologies. And this led to today's problem, which is distort product cost, delay and overly aggregate process control information, and short-term performance measures that do not reflect the increase or decrease in the organization economic position. This stagnation can be attributed to the dominance of the external or financial accounting statement during the 20th century. The demand for periodic and audited financial statement increased. Auditors prefer conservative accounting practice based on objective, verifiable, and realized. Next is academic lead astray. Why did the university-based researcher fail to note the growing obsolescence of organization management accounting system? And why did they do not play a more active or stimulative role to improve the arts of management accounting system designs? The article believes that the academic were led astray by focusing to narrowly unsimplified model of firm behavior, influenced strongly by economists, one product, one production process model of the firm. Management accounting academic found little value in the cost allocation imposed on the organization by financial accounting procedure. 60 years of literature emerged advocating the separation of costs into fixed and variable components for making good products decisions and for controlling costs. However,
Greetings to Madam Faiza and my fellow friends. Now I'll be sharing the last part of this article, which is accounting for caravans and innovation. Okay, so let's look at accounting for caravans. Basically, in this chapter, it was discussed about different kinds of events which actually gave importance to the accounting information. So this information all was taken from the publications by Fra Pacchioli in the original accounting book. So basically what happened in this story is that, there was merchants in Venice who took goods from northern Italy and sell to India. So in return, what they bought from India was tea. They bought tea from India and they sell to Italy. So I'm sure you all understand, right? They have bought from India and they have also sell. So that's transaction happening in two different countries. So when happening in two different countries, there is transportation costs. So how they actually accounted the transportation cost is the most major important point here. So the accountants, alright, when they sell their goods to India, they get profit. When they sell the tea in Italy, they get profit. So that profits they minus with the cost of the caravan, the petrol, the cost of caravan, how much and all that, and also cost of acquiring the initial load. That's how they recognize profit. So accounting played very important role in computing the overall profitability, and the net proceeds was actually given to the investors in the form of dividend. Nextly, I also learned that the investors, during the old ancient time itself, they actually understood that allocating the total profits of expeditions to a period as short as 3 months was not meaningful. It's because nowadays we have Shopee, Lazada, we can actually track our package and all that, and we know when it's coming and not. But last time not like that, in the ancient times, they have to be there every single time to know everything and all that. So I'm sure you all know it takes a very long time to go there and come back. So it takes about months. So how will they recognize profit? Despite there are some companies who prepare reports monthly. So how do they account it? So these companies allocate project profitability to short time periods within the life of a project, as they believe it is fruitful to attempt and obtain valuable indicators for short-term progress. So basically what I understand here is that from the article they actually said that it's like a project, it takes 3 months, so they actually go, take risk, they take risk because it's valuable. At the end of the day they get profit. Alright, so despite using caravans, there were many measures of the caravan's performance that during the third quarter of 1487. So how did they measure that was they actually saw what's the difference the caravan covers, what direction the caravan covers, how many provisions left, what is the condition of the inventory being transported, and are the workers happy or disobedient, rebellious. So this accounting for caravans has shown the importance to the cash flow, because it is to know the pattern of cash receipts and cash payment. That's what we actually learn from accounting from caravans. The last part of the story, from the article, is that innovations. So for innovations, they have given 3 major points, which is management accounting should be designed to support the operations and the strategy of the organization. Next, to improve management accounting, they need good knowledge. So how to get the knowledge is either we do experiment or we communicate. Which will give good new ideas. Last but not least, by having creative managers and academic researchers who are fully committed to develop new concepts for designing relevant management accounting systems. So that's all we learned from the article and also has been shared by my friends. Thank you.